Hello everybody, welcome back to my YouTube channel. Welcome back to my YouTube channel. Oyundi fulupera ni mashapa mananyana wa muvenda. And if you're here for the first time, welcome. If you're a returning subscriber, a veteran in this channel, welcome back for yet another exciting episode of Risk Money and Insurance. Okay, and so today, before we jump into this video, I just have an amazing announcement for you guys. So drum roll. We have partnered with the Economites and I have joined them as one of their contributors. So what that means to you as, you know, a veteran in this channel, it just means that, you know, you're able to read the content as well. Like, you can choose to watch the video or go read the content in their website. So from this video going forth, every time when I release a video, there'll be a link leading to their website so that you go read the material on the website as well. And so also, like, whenever you feel like you don't want to watch a video, you can always just, you know, click on the link and go and go read the article. I'll be writing articles for them. So that is the exciting news. I will put down, you know, links to their Facebook, Instagram and Twitter accounts, and also links to the website so that you guys can go and check them out. It's amazing. There's just so much to learn, you know, about what's currently happening around you and all of that, which I believe we all need to be empowered. We all need to be aware of what's happening around us. So today, getting into the contents of this video, which I'm really excited about. Remember when we did the to rent or to buy or to rent to buy video? I know, like, I posted on Instagram a Q&A, and a lot of people were saying they want to buy property. A lot of people, I got the feel that a lot of people wanted to buy property. So this video is sort of inspired, you know, it's sparking from that conversation to say, seems like a lot of millennials are jumping into the property market. They don't want to rent anymore. They want to buy their own properties, which of course it has its own advantages and disadvantages. But at the end of the day, hey, it's a personal decision. You need to make that decision for yourself. Allow yourself, you know, to look at your circumstances and decide what is best for you. Cool. Let's get on to the video. What are we talking about today? Today we're talking about mortgage protection cover, which is a form of insurance products that normally, if you take a mortgage, if you're buying your property, you know, you're financing that property via a bank, you will get a mortgage from a bank, and normally they'll advise you to actually take a product, an insurance product that is called a mortgage protection cover. So what this product essentially covers is, you know, situations where you're unable to work, so you don't have income coming through to your account, and at that point in time, that means you will default on your bond repayments and all of that. So this product is in place to ensure that in a situation where you're disabled, a situation where you die, a situation where something happens to you and you can't continue with your bond repayment, you like retrench or something, then they sort of pay the outstanding amount on your loan so that, you know, the bank doesn't repossess your house or whatever and you end up in a mess. So that's the whole point of having a mortgage protection cover, which can also be referred to as a bond protection cover. It can also be referred to as credit life cover. You know, there's so many names, but they in essence mean the same thing. But what I just wanted to highlight in this video was, you know, especially 2020 during the pandemic, a lot of people were retrenched like unexpectedly. It was just like, you don't have a job anymore, and a lot of people were worried about, you know, how am I gonna pay for my car, how am I gonna pay for my bond, and all that mess. Like, it's a hectic. So a mortgage protection cover sort of like protects you in a situation where you find yourself unemployed and you can't, you know, continue making those repayments. So it just steps in, and so just make sure that you don't lose your house. And I think the one thing that I wanted to highlight is just the fact that different mortgage protection covers from different banks or different companies, insurance companies, cover like different things. And the tricky one is with the policy wording, right? You need to be really careful with the policy wording. Why am I saying this? Because there are some mortgage covers that actually cover for temporary unemployment. So a situation where, for example, they say like, we're retrenching you for 6 months simply because we can't afford to pay all of you. There's some mortgage covers that will be repaying, you know, your installments in that 6 months period where you're not working. But there are also some mortgage protection covers that will say, you know what, we don't cover temporary unemployment. So in that 6 months where you're not working, you need to make a plan to sort of say, this is, you know, this is how I'm going to be hustling money in the 6 months. But I think it's very important to just ask about such situations, because a lot of those situations like happened last year during the pandemic, where people were just like, but I have a mortgage protection cover, but it turns out that it actually doesn't cover that. Like, it covers full retrenchment when you know you don't have a job like anymore, like at all, not this thing where you will go back to work perhaps after 6 months or something. So it's quite important to actually like think about it. And I think another interesting thing, someone might actually say, but if I have life cover, do I actually need a mortgage protection cover, right? So I will link the, you know, the video, I will link the video, the life cover video that I've already done. I did it last year to just, you know, so that you go back, you refresh what a life cover is, what it does, and what is covered. But the main point that I want to bring in this conversation today is the fact that a life cover pays out if you die, right? It pays out whenever that happens, like whether it's now or like 20 years from now, your life cover will pay out when you die. But when it comes to a mortgage protection cover, it pays out when you die, yes, but it also pays out when if you're disabled, for example, if you can't work, you're retrenched or something like that. So there are like a variety of situations that are covered under mortgage protection cover that won't necessarily be covered under life cover. So when will your life cover, you know, become useful in terms of repaying the outstanding amount on your mortgage? It will be in a situation where you die and you still have this outstanding amount on your mortgage which you haven't paid out, so your life cover proceeds can actually be used to actually pay out for that, you know. But then the problem is, if you're someone with dependents, then that just means you're chowing inheritance money for your dependents, because at the end of the day they'll use a chunk of that money to repay the outstanding amount on your mortgage. So sort of like a life cover covers, you know, things differently. Someone might say, I won't take out a mortgage protection cover simply because I have a life cover. But then what happens if you lose your job? That is another question. What happens if you lose your job? If you're retrenched today or tomorrow or 6 months from now, then how do you pay off your mortgage? Do you have means to pay off your mortgage? That should be the question if you're deciding whether to go for, you know, a mortgage cover, a mortgage protection cover as well. So it's just a thing of, can you actually repay in case that happens? What if you injured today? Like you're an engineer, a civil engineer, you can't walk anymore, you can't use your hands anymore, like literally you can't do anything. The only thing that you can do like is just sit. What if you can't do your job anymore? Then what happens in that situation? So those are the things that you also like need to consider. And I do understand, but what I really think it's reasonable about, you know, your mortgage protection cover is the fact that your premiums will decrease over time. So if your mortgage is like 20 years, then as you pay off your mortgage, right, the premiums will be decreasing because the outstanding amount on your loan will be decreasing as you go. As you pay it off, it's decreasing. So the premiums decrease. You don't have to go for medical tests or exams or all of that they do in a life cover situation. There's like nothing like that. And also, like, I feel like it's just that products that if you risk averse and you just like thinking, I don't know how I'll pay off, you know, my mortgage if I get retrenched today. It's just that product that I feel it's good to have, simply because you don't want to be in a situation where you have a lot of debt which is like unprotected and all of that, especially like as young people. Not all of us have the privilege of like having a trust fund or like a privilege of having parents that will be able to take over our mortgage repayments should anything happen to us, or should, you know, like we get retrenched or all of that. So that is the main thing that I wanted to bring to your attention today, to say there is mortgage protection cover which you need to look into and decide for yourself based on your needs, based on the person that you are, based on your finances, based on, you know, how much you owe, to say, if something were to happen to me besides me dying, if something else happens, if I'm out of a job or something, how will I be able to still, you know, retain my property, the property that I have, which is financed through a mortgage. So ladies and gentlemen, we've come to the end of the video. That is the main point that I wanted to bring today. And if you enjoyed this video, give it a thumbs up, you know, just to encourage other people to just give it a thumbs up as well. And also don't forget to subscribe. We're on the road to 2,000 subscribers. We're getting there. We're almost like 1.5, which, you know, it's like rather sooner than expected we'll be there. So don't forget to share the video with a friend and just keep telling people about this channel, and let's keep growing. I think at the end of the day, we want to create a platform where we can have more of these conversations and hear about other people's experiences and all of that. So I hope you enjoyed this video. I love you so much. Mwah. I will see you guys in the next video. Oh, bye.